time of the month again when CNBC-TV18 and Grant Thornton's monthly deal tracker gets us all the details about what's transpired in the M&A and private equity space during the period. So May turned out to be a mixed bag. There was strong M&A momentum, but the private equity space saw a slowdown in investments and decline in deal growth. For more on that, I'm now joined by Raja Lahiri, partner at Grant Thornton in India, who is with me right here in the studio. Hi Raja, thanks for joining in. My first question to you, M&A is strong still, but there is a significant decline that we are seeing in cash flows. What's the reason for that?
I think it's very clear that there is stress in the economy. I think obviously the banking sector is going through that. I think cash is king. I think that's a clear motto that is coming up. And clearly you will see distressed assets getting sold, and obviously companies with strong balance sheets, of course, acquiring. But I think the key is cash, and the second is quality of assets. I think that's going to be really driving deal making from the M&A perspective.
Okay, but there is still some amount of cash crunch that you're seeing in some sectors. So what would these sectors be? Would it be the regular suspects like cement, infrastructure, power?
Absolutely. I think that's the key one. I think you already seen JP getting sold to Ultratech on the cement side. There's obviously lots of transactions being talked about on some of the infra cement sectors. You've also seen, on the steel side, JSW acquiring Jindal Steel. So clearly these sectors, I guess, will see consolidation. Companies which will have be cash starved, will be stressed on the balance sheets, will clearly look to exit. And I think that's going to be the trend in some of these sectors.
Okay, so if you remove JP, if you remove the JSW JP deal, if you remove the heavy consolidation deals, is the overall M&A scenario looking slightly tepid?
I think it depends on sectors. You also saw Wipro buying a $400 million asset in the healthcare side in the US. So clearly sectors like tech, pharma, etc., I think are actually very bullish. You already see Dr. Reddy's buying out assets in the US, Sun Pharma always being acquisitive. So I think sectors like tech and pharma will continue to be acquisitive. I think depends on the sectors, I would say.
By when do you think we'll see some kind of a pickup when you look at the consolidation in the banking space? Because government has stepped up its effort to look at consolidation and to increase the consolidation, but we still haven't seen, say, the private sector open up. There are still deals that are out there, but we aren't seeing many deals go through. So do you expect the banking sector to also open up now?
See, I think there is, of course, possibility of transactions. There's no doubt on that. But I guess there are a couple of things. One is regulatory and still remains a challenge. I think second is the overall NPA scenario. So unless there are specific quality assets, I think banks will also be fairly prudent and conservative to kind of to make big bucket acquisitions.
Okay. Lastly, private equity, of course, as you said, has seen a decline in this particular month. So what's the reason for that? And is that a sign of things to come, wherein private equity players, they have been fairly conservative when it comes to investment, but could that be a sign of things to come in the next 1 year?
See, if you look at private equity, it's a little different play. Private equity, you saw last year, a lot of e-commerce companies got huge amount of funding. I think we've clearly seen that slowdown this year. And I don't think it's going to suddenly take an uptick quickly. So I think the slowdown will continue. However, saying that, I think you also saw Blackstone picking up emphasis, close to more than $500 million transaction. So I think larger private equity funds, buyout transaction is a trend which will continue to take off. I think e-commerce has already seen a slowdown. I think is not going to suddenly pick up in a hurry. However, companies like you also saw Lenskart kind of getting funding, etc. So I think it's going to be a mixed bag. Saying that, I would also like to say that there was a huge exit for private equity. Yokohama kind of KKR exited after Yokohama acquired ATG Tires for $800 million, etc. So I think mixed bag, quality deals will always get funded, but overall e-commerce looks quite tepid at the moment.
So would you say that the kind of e-commerce burst, the increase in valuation, the bubble that we were seeing for a very long time in the middle, say anywhere between 6 to 9 months, would you say that that bubble has burst now?
I really don't want to comment on the bubble, on the valuations and stuff like that. But I think fundamentally there is clearly a focus on profitability. I think that's the overall kind of focus. And I think venture funds will continue to focus on that and just not funding. But as a trend, I've always said that before, that this is a sector which will continue to evolve and grow bigger, the overall digital space as we move forward.
All right, Raja, appreciate you joining in as always to take us through the Grant Thornton deal track.